Hi, this is Randy Finney with Right Side of the Chart, and this is a midday market update for Friday, August 2nd, 2019. It's 11:43 a.m. Eastern Time as I'm starting this video, so I figured it's about as good a time as any to get a video out there. Lot going on in the markets. I wanted to kind of convey my thoughts on what I'm seeing, what I'm watching out there, what I'm looking at. Start out here with SPY. I just wanted to point this out. Props to member AVKA81 who pointed out this trend line that they'd been watching off the 2018 lows. So it's a potential trend line. I call it potential because it doesn't have a reaction, a third reaction. Now that's just me. Trend line in my book has to have at least 3 reactions because any 2 points can be connected at random. So it's that third reaction that helps to validate a trend line. So certainly something to watch. And more so, it comes in at some interesting support levels that I had highlighted earlier today. We're going to get to those in a second. I'm going to talk a little bit about the longer term or at least intermediate term outlook. And remember, I wear 2 hats or multiple hats. Active trader, at times day trader, quite often at sometimes. But I'm typically a swing trader, but I'm also an investor with long-term accounts. So I say that to not. So you don't get confused. I try to differentiate the posts that I make, trading ops, things that I might be doing, or things that setups that you might be able to take. And I have all types of traders on the site. Some people are active traders, some people trade futures, day trade, some do options. So again, I do my best, and if you have a question, just let me know. So as far as where I'm trying to go with this, as far as the intermediate term outlook, in other words, days to weeks, there's been nothing but bearish action recently. Everything I've covered, I'm not going to highlight again, the breakdown, the back test, but today's candle only reinforces or strengthens that bearish case. We've taken out 294 and we took it out with conviction, impulsively. This isn't a bloodbath, and if you're new to trading, it might seem like a big day. We're only down 1% on the S&P 500, 1.2. That's not very much. It is relative recently because we hit a period of low volatility. This has been the longest streak up until recently where the S&P 500 had daily price swings of under 1% since leading up to here. And as I say, fall asleep at the wheel. That's from those periods of low volatility, low price compression, low volume that I covered recently, some sell signals I use there. That's where the big moves come from. So now we've broken out. So a couple things confirm that the market's now picked a direction. It is the impulsive nature, these 3 big red candles. It's the breakdown, the back test, everything else I talked about. And I want to say this, I'm going to talk on some intraday levels and day trading ops that I've talked about, active trading ops today, but I also want to lay out the groundwork here that, remember, there's been a very big, a lot of red flags building for quite some time. I'm talking about not just the divergences, but I've covered things such as breadth indicators, bullish sentiment, short interest, all these things that kind of reach these extremes. And it's those extremes that make the difference, or at least set the stage, I should say, for the big drops in the market, not just the little corrections along the way. Little corrections on the way come from little 60-minute divergences, little near-term overbought conditions. But when you continue to build and then the dam finally breaks, that sets the stage. So where I'm going with this is I'm giving you levels as an active trader. Typically I stick to the trading room for that kind of stuff, where I reverse trades, or you might be able to, day trading ops, short-term trading ops. I did post some things on the front page today, some levels to watch where we'll probably get a bounce, and I made it clear, if you're an active trader and you want to try to game that bounce, great. And if you're not an active trader, you may want to ride it out, because right now we have additional check marks for the bearish case that I've been laying out for a while now. Just one extra check mark for the last 3 days in a row. So that says, if you're not an active trader and you're not nimble, you're going to probably regret trying to game any bounce. Either it won't work, you won't get the bounce, or you get out of your positions and you're going to miss the big move. And one way to look at it, if you've been bearish shorting here for a while, and you take the first 3% drop that you get, you book your profits. But we've had, talk about the official trades on the site, we've had a couple 2 to 3% losses. So if you add those up, and you're talking, if you take profits at 4 or 5%, you're just basically getting even to where you were before. And you know, trading 101, keep your losses small, let your winners run. And again, there's a little work to be done. So let me get into the intraday charts. You know, anything is possible. We're about halfway through the trading day. So a strong reversal into the close that would get us back up to, or close enough to, or even above 294 would then, let's just say, it wouldn't be bullish. There's too much bearish evidence, but it would, you know, it would give me a little pause. What could happen then if that does occur today? You know, it's not my preferred scenario, but it's certainly a possibility. So I'm laying out things that I'm looking for. So if we get back above there and hold, then we could just continue to wedge higher for a little longer. You know, within this wedge, or you know, anything's possible. Maybe that was just the back test. I talk about this a lot. 294 was a very important level. Still is on the S&P 500. The highs here, and we broke out. And as I said often, sometimes when you back test a breakout, you don't make a perfect back test. You used to in the old days. You know, I've been doing technical analysis for more years than I care to remember in trading, and it seems over time, I think it's from the proliferation of the algos, the algorithmic trading programs, that, you know, it's simple, you know, game theory. And you know, they look at market participants, and you know, it used to be, you know, back in the 90s and the 2000s, technical analysis, these levels you could almost bank on. Now I've become more of an adaptive trader, and I think like the machines. I think like my enemy. You know, the enemy is those that are trying to take money from retail traders. And so if every retail trader is going to say, okay, that's a backtest 294, I'll buy it. If it breaks, it's a failed breakout. So you know, the powers that be, the machines may take it down, run that, clear out stops, and then run it up. So what I'm trying to say is I give a little room for back tests of a breakout, and you know, not too much room. They'll need to recover 294 soon, but if they do, then again, it may still be we're back. It puts the S&P back above there. So that's just one thing I'd watch for. And at that case, you know, at that point, you know, it wouldn't mean cover all shorts if you are short, but it might mean hold off to add unless we break down again. And again, here's a trend line. So we may go right through it, and let's jump out to another few other charts, look at a couple of the levels. Here's QQQ coming up on support. 185.70 is what I had on the daily chart. Pretty decent support level. Let's zoom down to the 60-minute charts. That's where I've been focused today. So these are the ones I posted yesterday morning. Was it either before or just after the market opened, showing you these levels, and then again today. And as I always say, there's a pretty big thread going under one of the posts at least. I'm trying to keep up with comments and questions, but if you come into the site, if you get the email notifications, and you're interested in that security, whether it's the indexes in this case, index futures, SPY, QQQ, you want to come into the site, and then either whether a gold or silver member, check, you know, do a refresh, check for the new comments in there, because sometimes there'll be additional questions, and I'll even post additional charts. For example, I posted here, you know, what I'm doing, and in trading, I told you guys this, I always look at, even if I'm trading one index like the NASDAQ 100, I will always keep an eye on the SPY. And so what I'm watching right now, at least on the 60-minute time frame, it's not everything I'm watching, but on the 60-minute charts, I'm watching SPY, and I've highlighted that level, 290.14, pretty decent resistance, you know, give or take. I'm sorry, decent support. In fact, that was yesterday. That's where I had, you know, my initial near-term target, had the arrows going down there. So we're a little bit above it now. There's still a good chance we'll hit it. QQQ, 185.50. You know, I could put a little line above there, right there, about 186.10. Why am I doing that? I'll show you why. It's these lines back here. You can see this cluster of candles right here. And so that's pretty much where we hit today. So we'll call this more of a support zone. And although 185.50 is the level I had before, and I still think maybe it gets hit today, one more thrust down. You know, if it goes, that's the other thing I want to talk about. I'm showing you where I think we'll get a reaction, a tradable bounce for active traders. Get in, get out. I've shared some bounce targets. Maybe I'll get to that in a minute here. But I also want to say this, is going back to what I just said a minute ago in the start of this video about the excesses that have built up, bullish sentiment, divergences, declining breadth, dangerously low volume, dangerously low volatility, which means the institutions and individuals are on one side of the trade. They're all short volatility. And when volatility explodes, they need to cover that. That's called the short vol trade. It's just like shorting stocks. So let's call it a short squeeze in volatility. That's what you get. So let me just kind of, I told you I'd be all over the place today. So I'm pointing out the VIX. The VIX goes to sleep, but it wakes up once volatility expands, and it just keeps going up. You can see now we're, popped above that 1934 target today. And, those that were covered, short the VIX via various means are getting squeezed out, and then it's like any short squeeze where buying begets more buying, or on a sell-off, selling often begets more selling. So let's go back to the charts there, 60-minute charts. Again, just focus on near-term stuff. So what I said is I was targeting those levels, and I'm also going to show you the futures, 214.37. And on ES, that's the S&P 500 futures, and look how long we've traded on there. We hit that a while ago and just held it so far like a champ. And NQ, I had support here about 76.22. So in the updates I said, maybe go down to those levels, because most of those had a little more downside. But then I followed up with a post again in the comments section under the last futures post on the front page, saying that I went ahead and reversed. I was initially, I had stop and reverse, sell and reverse, to cover my shorts, and reverse to long order set just below there. And then the more I looked at, I watched ES holding on there, and I say this often that I trade. I'm looking at SPY, QQQ, ES, and NQ. And the thing is, if you're down this much, and the first of the four hit support, which in that case was ES, even though the other three haven't, that can trigger the reversal, and often does. I've said it another way, if you're trading SPY, you should watch QQQ and SPY, because if they both have comparable support level, let's say uptrend lines, and QQQ or SPY comes down and hits that uptrend line, and you're looking to, let's say, short it on a break of the uptrend line, and SPY goes through that trend line, you think you have a sell signal in your short trade, but at the same very point in time, NQ or QQQ comes and hits that support and then reverses. What's going to happen there? You're going to get a fake out, a false breakdown. So I look at that way to hold off on an entry. In other words, I give the benefit of the doubt. I want the last two or both to break down if I'm shorting. Likewise, if I'm going long, might as well at this point go long when the first to hit, which is again ES, and that way, if this is the level out of all four, SPY, QQQ, NQ, and ES, those four support levels that are all coming around the same area, if this is the one that causes the reversal, the reaction, so be it, great. Otherwise, if I'm holding out for that last, it was less than 1% to get into an NQ short, I may miss the reversal, and then not only did I not get the long positions, but I'm stuck in my shorts. And when the market decides to reverse, in days like this, it can go very fast. Now that all assumes I'm right. I'm not even going to spend much time on if I'm wrong. If I'm wrong now, it would be a stop below all of those support levels that I just showed you, somewhat below there. I'll watch the price action. I'll look at the 1-minute charts, everything else. This is just a small part of what goes into my analysis and consideration on trades. But there's NQ, and again, minimal downside. So I'd rather miss out on the last, 0.3% or so, get in. It's a little less favorable. If you can short right on it, your stop can be a little lower. But again, it's that's just how I'm trading. And then the other thing I look at is, and I showed you guys this yesterday, I posted it first in the trading room. I gave you uptrend lines on NQ, the NASDAQ 100. I used 1-minute charts on ES and NQ to help hone in on the short entry on the back test of those trend lines that occurred on the daily chart. So we back test on the daily, and then we broke those trend lines, if you recall, on the 1-minute chart. So when you look at SPY, you can do this on ES. Here's a trend line I had today, and this is when SPY hit that low and ES hit that low support I just showed you, but then we took out a downtrend line. So there's a near-term buy signal, at least a breakout, and we also did it on this downtrend line on QQQ. Maybe we come down, maybe they fail, maybe I'll put it, if we take another jog lower and go at those other resistance or support levels that I mentioned that are just below, then I'll watch, well, we have another trend line here. So again, that's where I see things for a very active trade. At most, a little minor thrust down might get it too. See how we're holding the lows? We may or may not. I don't know. If we get it, what'll happen is there's a lot of stops set right here on QQQ right now. It's going to look like this if we get it. You go down there, it will be a big run through. Stops will be hit. Johnny come lately shorts will come in and short. You know, is it objective to short? Well, sometimes, you know, if we're going to drop 3% plus today, sure, you can milk another 1.5% or, you know, so off the NASDAQ, but it's not as objective. The rubber band's stretched right now in the very short term, so I'll make it very simple. That's what I think happens. Either we already bottomed, or we get that one more thrust down, wash out this, you know, clear out the stops on the longs that bought here when they look like, you know, they saw things stabilizing, hit or maybe slightly undercut those supports that I showed you on the 60-minute charts that have not been hit yet. Now, with that being said, you know, I'm a very dynamic trader. My analysis is dynamic. I'll take the charts and watch the price action as it comes. If we slice on through there and we keep on going, that's pretty darn bearish. It tells me a little bit more about the supply demand dynamics in this market, and it tells me there's a lot of trap longs that want out and a lot of shorts that you know, didn't get in and now wish they were in. And you know, you can see my next support down here on QQQ, more of a support zone, and you know, that would have longer term bearish implications, I guess is what I'm trying to say. So there it is. Those are the levels. And the only other thing I wanted to cover in this video for you is the market-leading FAANG stocks. I can tell you XLK. Let's just do that. XLK has clearly broken down. Told you tech breaks, market breaks. There's no way to argue. That's an impulsive breakdown. That's everything you want to see. It's just like this impulsive breakdown back here. You know, again, these are levels that are just, you know, clearly telegraphed in advance, you know, the trend lines, and then you get the sell signals, and that starts those, you know, the biggest corrections that we've had in years in these cases. And this one looks the same. So to me, I guess what I'm trying to say, it's more a matter, we get a little kickback, come back and test support there. You know, right after this breakdown, we had this little kickback rally there, and then we continued. There's usually a kickback rally somewhere early in there. Or do we just keep going down? Again, it's been a one-sided trade, lopsided trade, which indicates that most likely if we get a kickback rally, there's a big gap right there, for example, in XLK, not far above. There's a lot of trap longs. Those that were drinking the Kool-Aid, you know, and you know, buying here at the highs, buying the breakout, they're probably going to want to get out, and that's the nature of technical analysis when you have these impulsive breakdowns. So, you know, we went from a buy the dip or just kind of hold. There was hardly any dips to buy here to now, you know, and unless this completely proves to be a big false breakdown whipsaw signal, and if so, what would tell me that might be the case? Well, there's that gap I just showed you on XLK. If they get back above that gap, let's call it around $80 or so, that would be a sign, especially well above $80, not just marginally. SPY told you 194 is or 294 is a big level. Get back above there, it would, you know, bring it into question, but wouldn't completely, and I can tell you, it wouldn't eliminate the bearish scenario. You can see we'd have to really take out these candles over the last 3 days and get back above the highs. So really anything to me that happens in SPY right now, short of making a new high, isn't going to change what's already happened. Oh, and then the other thing I wanted to show you guys, and we'll wrap it up here, are the big market-leading FAANG stocks. You know, I did a video just recently saying, you know, the market's not going anywhere until the FAANGs start breaking down. So here's Microsoft, world's largest company, kind of flirting with, I have a price channel. Use this trend line and this one up here. See that they make a price channel, but I had this I have probably a higher weighting on. It kind of meshes with what the market was doing, this little wedge pattern. But you know, like I said, this broke down, and quite a few stocks have support below. So Microsoft is hanging on by a thread right now to this price channel. If that breaks, I don't see much stopping it to about 130.46. So that would be the first target. And then I don't know if that downtrend line is valid anymore. Let's just focus on that. The point I'm trying to make is the more fangs that you have breaking down, the higher probability that this breakdown in the market will stick. The more fangs that are now fall to support, hold, and bounce off that support, the less likely we're going to go any further lower until and unless those levels break. Apple just broke trend. There's a nice clean trend line. Apple's known for does this quite a bit. Blow out earnings, yeah, everyone gets excited, buys it, and then boom, they disappoint. It's almost it seems to me over the years you probably have a good strategy just fading all the Apple's post-earnings pops. Not always, again, it's not a strategy you can always do. But again, from a technical perspective, forget about anything else in the company fundamentals. You had a breakout right here of a downtrend line, which now is a failed breakout, aka bull trap. You also had a breakdown of this minor uptrend line, that's bearish, and you also had a rejection, a failure at that key 216.41 level, which was very, very important support here. Once broken, it led to the waterfall sell-off in last quarter, and then a rejection on that level there again, and yet another rejection. And even better than a rejection is a failed breakout. See, this is why you have to kind of read into the charts sometimes and know that that's what Mr. Market does. It's tricky. It likes to trap and trick the masses. So a lot of this is called a bull trap. Broke above 216, well above 216. Everyone, whoever jumped on that breakout jumped the gun and they're burned. And now they're, deeply underwater for chasing that. And that's the way technical analysis works. Fewer things in trading are more bearish than a failed long side breakout, because you have all those longs. Now they're down 9%, whoever chased that high, in just a few days. And they're regretting it. And they want out. And the lower we go, the more pain you'll feel. So anyways, that's for now. Let's just say it's a failed breakout and a breakdown below these support levels, and unless that gets undone, that's just bearish. There's no other way to spin it. Amazon, there's that same wedge that we had on the indexes. Amazon kind of led the way, took the lead. This is one of the world's largest, most beloved companies. Broke down from clean, well-defined uptrend line. Same story as the market, overbought, divergent high. Consolidated, held up a little bit because the market was holding up, and then boom, now it's at support. And this is another reason I favor a bounce here. This is one of the world's largest companies, top component in the indexes, and it's already down, in just a few weeks here. The stock has dropped over 12% to a pretty well-defined support level. I'm pretty sure you could get a bounce. I can tell you this. Longer term, I think it's going lower in the weeks, days to months to come. But near term, I'd take it here right now at off 1810 for a bounce trade. Get 2-3% out of it, even 1% if you leverage up. It's worth it, and with a stop below. So maybe you don't get a bounce trade out of it, but trading is all about risk and reward. Take it for a 3% pop with a 1% stop below that level, and you get stopped out. But might want to see what happens. Let's watch the markets today. I'm not going to put that on as an official trade. It wouldn't be enough anyways. It'd be a quick counter trend trade, and more so if we just pop through that 1810-ish support like it's not even there, without even a reaction. Again, it tells me a little bit more of the character, the nature of this sell-off. It's saying, ooh, this one's not pretty. Those are the ugly sell-offs, when support levels that should produce a reaction get sliced through like they're not even there. It tells you there is a very dangerously bearish shift in the supply-demand dynamics, meaning very few buyers and buying the dip, very few left to buy the dip, and a lot of longs that want out and a lot of shorts that want to jump in. So that's kind of the things I'm watching. Finally, just a couple more here. Alphabet, that's pretty good support now. There's another one, and again, here's me making the case that we're probably going to bounce here, because this is, again, one of the world's largest companies, top component of the NASDAQ 100. 1200 is a very powerful, important, technically significant support level. It is a bottom of a huge gap. You usually don't see gaps this big on Alphabet. This is also kind of telling us what's going on in the market. This is a very toppy action. Look at these two big gaps. Going back in time, you don't see gaps like that in Alphabet in a nearly $1 trillion company. It just, you've seen this lately, and it's not good for the market when these big market leaders gap this way. It burns people in both directions. But either way, let's just say keep it simple. The bottom of a huge gap like that is a very technically significant level, and this is the first pullback to that level. Yes, we overshot it intraday. I talk about that all the time. That's called a momentum fueled overshoot. We had a near vertical plunge down into that level. You're not going to hit 199.71 to the penny or whatever in the reverse. You're going to overshoot it a little bit, then come back. Point is, right now we're on it. We're on that 1200, we'll call it 1200 level. And so there's another reason the market's likely to find support here. And now, to me, if it takes out today's lows and all those levels I just covered a minute ago on the indexes, sure, we could go lower. But to me, I'm looking for a bounce here. And way to trade it, active trading. I'm a big, I like the NQ, sometimes RTY, only because you get more bang for your buck in the small caps. That's, IWM or QQQ. So there's RTY, another one at support. Let me add one more line right here for you RTY traders. Sometimes I forget to do updates on this one. See these previous reaction lows. So this is a very decent support zone. You can see here. Let me show you. Going back here, a lot of reactions around that level. There it is. Reaction low, reaction low, reaction high, reaction high, reaction low, reaction low. That's how I come up with support and resistance levels. The more reactions you have, the better the level. This is the initial tag from above. We haven't tagged that level in a while, so on this drop, that's the initial tag. There's pretty oversold reading. In fact, I'm going to pause this video. I'm going to take a little RTY. God, wish I would have done it here. That's when I reversed my NQ, but I'm going to take a little of that. Hold on. Okay, I'm back. All right, where does RTY bounce? Well, you look at these reaction lows have been minimum. What I'm going to try, if assuming I'm not stopped out on this trade, which if I'm going to be stopped out, it'll probably be by the time you even are watching this video. Probably take another low, cut down, and if we go through again the bottom of those, well below those support levels, and I'll read the chart. Sometimes you get these capitulation type sell-offs where you get a big drop, sharp big candle on high volume, then the reversal comes. So you have to, you have to just monitor everything, the intraday charts, the 60-minute charts, things like I just showed you. Where are all the large caps stocks, the big market leading stocks? Are they at support or close enough that we could get that reversal? So I'll give it a little room. And then where I was going with that, my plan will be to trail stops up. Once we start seeing a reversal, set stops, move them from where they are up to break even at that point, and then keep raising them up. And then we'll see. Again, it's the nature of whatever bounce. I'll probably peel off at least half of the day trade position at these initial targets here for like RTY and NQ and ES. Somebody asked me ES where my targets would be because they're trading ES. I said right here. 29.50, that's 29.55, we'll call it right there. I added that support line. But when it gets there, you can either, set a hard sell limit order to book profits, and not right at it. You want to do a little below. If everybody's watching 29.55, you want to step in a little early. Or what I like to do, if you get a powerful reversal and it looks convincing, is just, trail your stops up even when you get there. Set a stop. That way, if you pop on up here at about that 2162 or 2962 level, you've made some extra juice. You can even continue to trail it up that point, and you might, we might go even higher. We'll see. Again, I always say the charts are dynamic, so we'll just have to, first of all, even get a bounce. Right now, we've had a little bit of a bounce off that 29.14 support, but it's not the, you'll know the powerful reversal when it comes. All of a sudden, things will start going the other way if we get it, as the shorts start to cover those that realize that the bottom is in, at least for today, and longs want to jump in and buy the dip when they see that the worst is over. Well, that's about it, guys. I mentioned SOXX, this thing's coming up. There was a lot of support, like I said, that was just taken out today in the markets. SOXX has some support coming up here at 199, but it's clearly broken the trend line. And as I said, I may get that one out as official trade. A lot of these lately on the indexes as well have been more soft entries than hard entries, because we did have trend lines and back tests to short off, and I was very clear on those. But there's still some supports below that say that these breakdowns could prove to be false breakdowns. And again, it was obscured. These signals were obscured or made a little less legit, if you will, by both the FOMC announcement. That's what caused the big drop the other day on Wednesday, and then of course Trump's tweet, which came after. Now, what I think happened on that, just to address that, and then we'll wrap it up here, is I think that, or my belief is, right or wrong, the technicals are what they are, and all his tweet did, it came afterwards, it just accelerated the reversal off this level. I believe we would have still, it was an objective level. I believe we would have still had a reversal, and we may not have just dropped so fast. Again, if the markets were healthy and happy and strong, the technicals were strong, his tweet would have been shrugged off. There would have been a little knee-jerk reaction, and then they would have bought the dip. So again, the technicals are there, and then the news will flow, like you say, on a strong market and a strong uptrend, good news is good news. Bad news is either good news or just shrugged off and dismissed. In a downtrend, impulsive sell-off, bad news is bad news and good news is ignored or treated as bad news as well, depending on how people want to look at what the Fed's doing with their, whether they're becoming more easy or more hawkish. All right, let's wrap it up here so I can get out to you guys and watch that. Let's see if we get that reversal. And levels, I already showed you some bounce levels. We're looking at QQQ. Just use the charts that I posted earlier and yesterday as well, the 60-minute charts. Those same support levels that broke on the way down should now act as resistance levels on the way up and could be price targets for active traders. And again, longer term swing traders right now, each day for the last 3 days, we've only firmed up the bearish case more and more and more. So if you were bearish and short the other day, you might want to sit tight and hold, with stops in place just in case it proves to be a whipsaw, signal false breakdown, especially if you see that QQ or SPY getting back above 294. Just don't get married to your trade. That's the only thing, because like I like to say, anything can and will happen in the market. All right, we'll wrap it up here. This has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.